What is one piece of startup or investor advice you believe is underrated or under-discussed?
I think that there is one skill that I believe founders sometimes they underrate, many times they underrate. That is sales. This is something that I really like to assess in teams because we usually tend to think that it's easier than it is. And it's really hard to sell innovation. It's really, really, really hard. I was in this role when in my startup, I was the commercial part. And it's extremely hard. It's not like selling product, established product. And usually everyone takes it for granted. Everyone thinks it's much easier than it is in reality. So sales is one of the points, I guess.
Hey everyone, welcome back to the Ignite podcast. Today we're thrilled to have Cintia Mano on the mic. She is the former CEO and co-founder of Core Angels, an international network of angel investment funds that supports early stage startups around the world. Before leading Core Angels, Cintia spent more than a decade in corporate and venture roles, including management consulting, entrepreneurship, and investing. And now she helps build and scale global angel ecosystems. We're excited to dig into her origin story, her journey into angel investing, and how she sees the future of early stage investing across geos and sectors. Welcome, Cintia.
Thank you. Thank you so much, Brian, for having me here. It's a real pleasure.
Yeah. So I'd love to get your origin story. What's your backstory?
Okay. So my career started very traditionally, let's say. I studied computer science, then I did my MBA, and I've been to consulting firm, big corps, so climbing the corporate ladder, learning how to navigate, and I like it very much. I had a very good time in this environment. But there was a time I had never thought about becoming an entrepreneur in my career when I was studying. My goal was to work for a big company, and I did this for a while. But then came a time that I was a little bit tired of the old-fashioned way of building stuff in corporate. So I was looking at what was going on with startups, with technology development, and I had an opportunity of joining in a startup. So I left the corporate world, which was a decision that took me a while to take. I was not prepared to take this decision very quickly. So I took some time to think about it. And I had this opportunity and I decided to jump and take this opportunity. And I joined a startup in the energy sector. This was a complete change in my career. I fell in love with the startup ecosystem. Of course, there are many struggles when you are living a corporate position with the title benefits and the status and everything. And all the future ahead that you can see, well, if I stay here for more 5 years or more 10 years, where can I go? What can I reach? But I decided to take this opportunity and I didn't regret any time. So I really fell in love with innovation, entrepreneurship. I started mentoring some of the early stage startups that I met in the incubators, accelerators, and events that I met. Because with my corporate background, I could help them, especially the ones that were serving the B2B, were designing B2B solutions and serving big corps. They didn't know exactly how to approach this type of clients, how to serve them. So I started mentoring them. And then I realized that, well, there is missing capital in the very early stage because I saw many talented people developing amazing stuff, but they didn't have the peace of mind to test and validate what they were designing. So what happens was that they were trying to figure out how to build stuff, what markets they would be serving, validating solutions, market pricing, etc. But they didn't have time to do that. They were, or they were very rich, or they need to pay their bills, and therefore they wouldn't afford having like 1 year or 1 year and a half not making any money and trying to validate that. By that time, it was like 10 years ago, there was very few capital to early stage. And this is something that made me think, well, I have some money that I invest in other stuff. Why shouldn't I get some part of my money and invest in talented people that I know and make a difference in their stories, in their journeys? So this is how I started thinking of angel investing. But this is not how I started. Between thinking about it and really starting to invest, it took me a while.
Yeah, that's interesting. I had a similar story. From when I started thinking about it till I was actually doing it, took years, I think. I probably started thinking about it. Yeah. Probably a couple of years before I wrote my first check. And then I was probably writing angel checks into syndicates and direct for a couple of years
Mm-hmm.
before I actually started my own syndicate. What did that process look like for you? Kind of that
Yeah,
escalation of
yeah,
commitment.
yeah, it took me a while because when I started thinking of investing, first I thought, well, is this really for me? Because we tended to see angel investors at multimillionaires. They have just 5 million in their pockets to throw away, and it was not my reality. On the other hand, also I wanted to invest, but I'm not a crazy person. I'm not responsible with my finance, so I wanted to invest in more than one startup because I knew that the risk is really high. So I wanted to invest and diversify my risk. So this is something that made me think for a while. And also, I think I saw that there was a learning curve, that it would took me some time to understand precisely what would be the commitments that I have to make. So the legal stuff, what are the conditions, the terms, the clauses, and trying to understand everything, figure out everything. So it took me some time because I didn't have access to knowledge on this stuff all in one place, And later on, it motivated me to write a book on angel investing with a friend, precisely because I felt this, I missed this a lot when I started. And I think that this could be helpful to aspiring angels and people who are starting right now. So it took me a lot of time. Then I found a group of people that were doing this together. So I started investing with a group of angels, and this made a difference for me because I started, well, first you feel like you are with a team, with a group, you are learning together. People can give you some hints on things that you don't know. You feel, I think it's easier for you to ask them questions or to make wrong decisions or to discuss decisions a lot before taking them. So starting with a group, I think it was the best way for me.
Yeah, I mean, it's kind of like the wisdom of the crowds, right? If you're in a room with a dozen or a couple dozen people, you can
Yeah.
bounce ideas off each other and kind of learn the collective wisdom of what's in the room versus just going it alone.
Yes, absolutely. And sometimes it's just paying attention to the questions that are being asked. You start learning a lot, So why is this person asking this? And it never came to my mind. And then you start to fine tune a little bit your mindset to evaluate the startup, to try to figure out the things that are not in the spotlight, and try to investigate a little bit more.
So let's talk about Core Angels, the origin story there. How did that network come together? What was the vision at the beginning? How has that evolved?
Yeah. So this first group that I took part was the ideal group for what came next with Core Angels. So in this first group, we were all angels. We invested in the same group of startups. So there was not like just a deal flow sharing. We were deciding together and investing in the same group of startups. And this experience was I was very happy with the experience because it made sense for me, not only because of the aspects we were just discussing, like deciding together, it's safer, but also because after investment, in the post-investment phase, it's much better if you are sharing the same portfolio with other people because you can actually support much more the founders. I don't need to support. I'm very limited with all the support that I can give to one startup, and the other angels are limited as well. But we together, we have a group of background, expertise, connections, network that together we can help much better all the founders. So it's very common that I'm talking to a founder and he or she is experiencing some trouble and I cannot help with my expertise, but I know someone in the group that can. And then I make this connection and they can work together. This is the first group and I like it very much, the experience. I decided with another colleague, with another fellow angel, to open a similar group. Other colleagues in the same group made the same decision. And the founders of this group, they invited me to think about a model that we could replicate this to different groups, to different geographies. Okay, so this first group was based in Portugal. We created more groups in Spain, in Brazil, in the US, and then it started spreading. Till now, there are 13 angel funds within Core Angels in different countries. Each fund has its own thesis, on group of angels, and on portfolio of startups. So right now, Core Angels might be in 350 angels with a portfolio of 120 startups. It's something like this.
So how are the funds managed? Is there a GP or is it kind of like
Yeah.
every angel that's an LP is like a co-GP?
No, in fact, there are usually two fund managers that they are responsible, usually two. Why? Because one is more dedicated to startup deal flows, creating opportunities and bringing opportunities to the group. The other one is more into getting to know and selecting good angels, potential good angels for the group. And why that? Because we understand that it's not just a matter of having money to become a good angel. You need to have someone, the person needs to understand quite well what sort of investment is this. This is a patience game. This is not something that will return to you in 2 years. You cannot count on this money in 2 or 3 years. So we need to be very aligned on this. So one of the fund managers is more into bring in angels and the other bring in startups. They don't decide the allocation of capital. What they do is they facilitate this. So they bring startups to investment committees, and the angels, they vote. So if 2/3 or more of the angels, they approve a startup, they will be invested in the startup. If not, this is not going to be an investment. And if you're part of this group and you wanted to invest, but it was not approved, then you can invest directly in the startup. You can discuss with the founders, but not through the group. So this is how the model works in Core Angels. So all the funds, they work in the same way. But of course, they need to adapt to the cultural aspects of each country, or even sometimes the thesis, if it's very focused on a specific industries, vertical, you need to make some adjustments. But this is basically the model.
So yeah, it sounds different from a traditional angel network in
Yes.
that you actually have a fund, and the fund has, this kind of super majority voting requirement to actually make an investment from the fund. And then each of those angels are members of the fund, right? Like an LP in the fund, pro rata to their commitment in the fund. Is it a typical kind of a 10-year kind of 3-year call down kind of structure?
Yeah, exactly.
Interesting.
In terms of legal structure, in some countries they are regulated funds. In other countries they have simple ways, like a limited companies, depending on the size of the fund and the legal framework of each country.
That's interesting. What is the typical size of these funds? Is there a management fee? What's the check size? All that stuff.
It depends on the thesis. We have some funds, they are investing in very, very pre-seed. So they invest like 80K in a startup. So in this case, the checks that the angels are investing are lower, 25K, 50K, something around this. We have other funds that are investing 300K in a startup, 100K in a startup. Then the checks are of investment from the angels are higher. And it's trade-off. So when Core Angels is deciding with the fund managers how this fund is going to work, we discuss this a lot because we don't want to have like 100 people as angels in a fund, because it's a lot of drama to manage all these people. It's really hard. But also if you have just 15 with big checks, you don't have all this diversity supporting the founders. So this is a trade-off in terms of size of the fund, in terms of amount of angels participating. But also, we don't want to have 10 startups invested because it's too low to diversify the risk. So we think of usually 20 startups.
So you're doing about 20 startups per fund.
Yes, that's the goal for all the funds usually.
Gotcha. Why 20? Why not 30 or 40? How do you guys kind of center in on that?
It can
number?
be, we have two funds that they have already invested 27, 28. They just closed. They are not investing anymore now. They're just following on. But it's a lot of hard work also. If you don't have, because it depends a lot on the cycle also. If you're talking about health techs or some industry that needs some gateways of approvals, then the cycle is longer, then you can have a chance of funding more. But if it's a very short cycle, there will come a time that you have to, when you're managing a portfolio, there comes a time that you need to pay attention more to growing the startups that you have invested or helping them with the next rounds so that you can provide your angels with exits opportunities and liquidity. Then, starting to help them get the first ones in the beginning of the round, etc. So it's kind of complicated, but they can reach up to 30 startups.
Right. Leads into the next question, which is this tension between pure capital allocation and then hands-on value add through the mentoring, fundraising, operational support, all that stuff. How do you guys manage that trade-off?
In the ideal world, we would have all the angels putting money and time and energy, but this is the ideal world. And we understand also that life happens. So sometimes there is an angel that is coming and entering a group, and this person is in between jobs. He has lots of time. He's very engaged, but then it's going to another challenge and then not so much time available anymore. So it's important that we have this balance. We usually say that around 30% of the angels are active, in terms of supporting founders after investment. In terms of participation in investment committees for approvals, what we do is we do the sessions. Sometimes it's hybrid, it's local to get people together in the same room, but also online. And then we make the recording available to all the angels and leave a space like for 1 week for them to watch, ask their questions, download the material, and so that we can have more people participating in the decision. But of course, sometimes they're traveling, they're doing other stuff, but usually 30% is what we have as the observed metric for active angels.
Yeah, it makes sense. And geographically, you guys operate across Europe, LATAM, MENA, Africa, all that stuff. What unique challenges and opportunities exist when investing in markets outside of the classic US ecosystem?
Yes. Yeah, it's interesting because there are plenty of opportunities. It's a market where valuations are typically lower than in the US, so you can have better deals in this sense. Of course, the founders are not so mature investment-wise as in the US, the same thing. So you have an opportunity, but you also have to back up a little bit the founders in this sense. There is a lot of opportunities also for bringing them international opportunities. So one of the advantages of having this network and making people connect is that we can support a startup that was invested by our group in Chile, South America. If they have plans to come to Spain and Europe, we can support them with our groups in Barcelona or Madrid. So this kind of arrangement is very, very powerful to support the startups as well. And of course, dealing with cultural differences. And this happens everywhere. So it's very interesting when you have a founder coming from Europe wanting to enter the LATAM market. It's very supportive if they have angels that are in that market saying, look, this is not how it works here. You need to get this, do that one, number one, number two, number three, and then you're good to go. So it's like a coaching part of being an angel, and I think it's very useful in some cases.
Yeah, and that was literally the next question. You have all these angel investors coming in from operator backgrounds. How do you help them think about the transition to the investor mindset? Educating them on portfolio risk, diversification, time horizon.
Yeah, one of the things that we see is many of our angels, they are coming from the corporate experience, and sometimes we hear some questions like, "Oh yes, but I don't realize how the EBITDA is this size, or how do you do this evaluation with this sort of metrics?" And we need to educate them somehow. Like, this is a different game, we are evaluating potential. And for someone that has been working with finance or corporate finance for a while, or evaluating consulting projects in the corporate side, it's a lot of risk, like people take a look at the numbers and say, oh, but how do you say it values 10 million, because I don't have a spreadsheet with all the financial projections, and the projections are not, that reliable. So it's really educating part. This is why in Core Angels, we started to develop some courses to our angels as well, like explaining the metrics, explaining how what are the valuation methods that exist and how you can apply in one case or in another. And it's different, like thinking of a big company and thinking of a startup. But it's part of the fun, that they have in this activity. Many of these angels, they are working with big corps for their whole lives, and they know exactly how it works, but now they want to learn something different, and they want to engage with this new world, a new way of doing businesses. So it's a fun part also.
Yeah. What lessons have you learned about the founder investor dynamics when you're working cross border? Culture, time zones, regulatory, expectations, all that stuff.
Talking about culture, well, I have a funny story to tell about Core Angels. We have funds in 8 countries, in Europe, US, and we were having a meeting with all the fund managers, and the meeting was scheduled to something, I think it was like 5 p.m. Yeah, 5 p.m. Lisbon time. And we have all of them, they were trying to get there on time, etc. And then one leader said, 5 p.m. is not a very good time for me because, we have dinner at 6. And so for me, I struggle with that. I have to pick up kids and then we have dinner with family, blah, blah, blah. And then the guy from Spain comes and say, dinner at 6? I have dinner at 9 p.m., 9 p.m. I'm coming from the gym and I have dinner at 10 p.m. And oh, really? 10 p.m.? And we were discussing like for some minutes, what would be the best time? And even in time zone, it was not easy to agree, When you go to other stuff that are even more complicated, like how do you hold meetings with clients? How do you ice break in different cultures. It's different, how you shake hands or not shake hands. You come to Portugal, people kiss on the cheek, it's very common. And then it's a lot of learning for the fund managers, for the angels, and also for the founders. We also see that founders, they tend to be much more open to learn this stuff because they are interested in selling their products in different markets. So they are very quick in understanding how things work. Legally, it's a challenge because even if you're talking inside Europe, of course, you have the common regulatory framework, but there are differences in the practice. And if you're comparing to other countries, well, it's, to US, to Brazil, to Chile, you need to adjust. So the fund managers in the beginning, especially, they needed to dedicate some time and work with lawyers to understand how to frame it in a way that it would be comfortable for angels to invest and founders to get invested, because it's a business of trust. So we really need to have transparency and trust between all the stakeholders. Founders, they need to feel like they are being invested, not because people want to take advantage from them, but because people are believing in their business and they want to be part of it. It's completely different. And in some cultures, in some frameworks, we don't have the proper way of doing that. We are building stuff, like things, these are all very recent, so we need to make some adjustments to guarantee this.
Yeah, it totally makes sense. So let's talk about focus themes and sectors. What sectors or themes are you actively leaning into right now? Obviously AI, but there's also fintech marketplaces, climate tech, emerging markets. I know Core Angels has written a lot about climate tech and emerging markets. So I'd love to know, and I know you're not CEO anymore, but what sectors and themes are you guys actively looking at?
Yeah. I can share, I think that in Core Angels, we've been seeing a lot of AI, of course, as you said. In one hand, angels, they are very enthusiastic about it, but they are also cautious because we see that all of a sudden, every single startup that was pitching to us, they started saying AI. And not necessarily they were using AI in an advantage way, like maybe they're just using automation, not AI, And so it's hard. And so the fund managers, they realized that they needed more support from experts, or the angels themselves. They started reading more and trying to educate themselves more, or reaching out to people that could support them in this kind of evaluation. Nobody wants to invest in something that says it's AI solution, but in the end, it's not. So we have to separate the buzz from the real thing, So AI is, of course, one thing. And we've been seeing a lot of tech and health tech and convergence with AI. So I think health is one of the sectors that will be highly impacted by AI. We have verticals in Core Angels. We have one vertical that is dedicated to food tech, which is a trend, I guess. I think that we are still in the beginning, but in the near future, we'll have lots of very interesting solutions being maybe possible. Food is a challenge right now. So like not only amount of food, but good quality of food, healthy food, and all the consequences that it brings to our society. At climate, we have also invested. And in terms of verticals, I think this is it. In the end, it's kind of how can we use technology to make good impact in the world? Like it's not impact speech like philanthropy, or because people, they have a very hard time in talking about impact investments. Usually many of the financial people, they think impact is just, blah, blah, blah. It's just let's hug the trees and hippie stuff, but it's not. But right now with AI, I think there is a very good possibility that we can use this machine thing to really accelerate the testing of new technology to make things better.
Yeah, I'm a techno optimist as well. Given your lens on early stage investing, how do you assess a founder's traction or starter signals when you're still in the, really the angel round, is kind of a new phrase, I think, before the pre-seed. Where do you guys play at Core Angels? Do you guys consider yourselves angel round? So like pre-launch, pre-revenue? Do you consider yourself pre-seed? What metrics matter, and kind of what box do you guys play in?
Yeah, pre-seed and seed. Pre-seed is really tough to assess because traction, you don't have, the typical metrics, okay? But there is something that I like to assess that is not necessarily the numbers, like number of clients or number of people responding to a research or whatever, but it's the speed of founders working on it. And it's something that you can assess when you are building a relationship with the founder. This is why I truly believe in building relationship with founders. Sometimes I talk to founders for 6 months, 1 year, and then they are in an investment committee. And it's important that they understand this, because it's not because we don't believe in their business. It's because there are certain things that need to happen so that we can all be enthusiastic about it. It's not simply that's a fantastic idea, because many fantastic ideas, they die. So we need to assess what are they working with. So one thing that strikes me most, when I really like to see in a founder when they are in the pre-seed, is this ability to listen to the market, to the feedback from the market. It's really common to see founders, they have designed the solution and they think this is the best solution to address the problem they want to solve, but they are not doing enough research, or they are not validating this with the market. They want to wait until the solution is good enough so that they can present, they can start talking to potential customers. And many times when they start doing this, they have spent a lot of time. And so when we see that someone is developing a solution and right away, communicating into the market, making some tasks, doing some research, getting feedback, adjusting, and doing another iteration. So when we see founders that they have this clarity that they need to do that, this is a very good sign, because it means not that, well, by magic, the solution works. No, it's that they will work until the solution works, So they will be pursuing this until it works. They are not attached to what they built. They are looking to solve a real problem for a big group of people or companies. So in the early stages, it's much more on the founding team, like their behavior, how they see what they are doing, what are their expectations in terms of how they feel about growing the company, what are the next steps, and how they are working together. This is a very risky aspect in founding teams, because sometimes, as I said, people, they have to pay their bills. And sometimes you have co-founders that they are very complementary in terms of functions, but they are in different periods in life. So you have someone that urgently needs to make some money out of that, and another founder that, well, I can wait for 2 years because, my partner is working and it can, support me a little bit, or because I have some savings from my career and I can wait a little bit. So the level of risk that each one is able to accept also makes a difference. So I think that in the pre-seed, of course, when you are in seed, you start to have some metrics, and it's impressive. Sometimes we see founders, they don't know about those metrics. They don't know about customer acquisition costs or LTV or, basic metrics. And there is another aspect that sometimes founders, they don't see, that is, if you are asking for investment, you need to demonstrate your capacity to manage money. And, it's impressive to see how many times people, they get money, they fundraise, and the money is gone in 6 months, and they hire in a way that they don't stop and think and plan. And, well, I'm going to start hire from this role because this will bring me money first. And then there is no point of having an HR manager in a company that has 5 people, or let's bring a CFO to a company that's not making a lot of money yet. So it's complicated in the seed because they are still in the garage mode, but they need to have these competencies with them.
Yeah, I like that. That's why I tend to only invest in companies that have revenue, because I feel like if you've gotten to revenue, you've de-risked the startup by 90%. Because you have 10, 20, 30,000 of monthly recurring revenue. And especially if you've bootstrapped it, that's even more impressive to me, because now you know how to manage money. You've bootstrapped this thing all the way to 20,000 of monthly revenue. And so you're going to be a good steward of capital, and you're only raising capital now because you want to go faster, rather than, hey, I'm raising capital so I can hire the head of HR and the CFO and stuff. Like that's not a good use of funds. That's a really good insight.
But that's a very good point that you brought, Ryan, because it's not, there are many founders that they think the only way they can build a company is raising money from investors. And this is something that I tell all the founders that I mentor, or in university when I have classes, or what I say is that investment can be very good, but can be a nightmare for you. If you are raising money because you want just to fill in the, tap the hole that you had because you didn't manage money well, this is going to be a nightmare. If you convince someone to invest, it's hard, but if you convince someone to invest in this situation, it will be a nightmare for you in a couple of months. If, on the other hand, if you know what you're doing and you find out how's the model of your business, how you are already generating revenue, have a tested and validated market, and you just need more money to accelerate your growth, this is a totally different story. And as you said, if you've been bootstrapping, you prove a lot of competence already, because you were able to build a business and make some money out of nothing. So money will come to add and not just to postpone your pain.
Yeah, I love that. How do you think about global versus local when backing startups? Because you guys are, you have this tension between global scalability versus regional specific moats, especially around your angel base in each fund.
Yeah. When we started, it's funny because in this first group that I started, we were based in Portugal, investing in Portuguese startups. And one of the founders of the group always says that, well, angels, they like to invest in companies that are 2-hour drive away from their homes, because then they can go there and check what's going on. There was this mindset. But when Core Angels started, we were in the pandemic. So it was 2019, the first group, but then when it started scaling, it was 2020. And by that time, or we could have meetings through Zoom and sign contracts using DocuSign, or we would not do anything. So there was no way. And so because of the pandemic, we started seeing people more open to, okay, let's take a look at this company in this other country. Or so there, I think that we started to be more open to new opportunities in different countries because we didn't have the physical barrier, So this is one of the things. In terms of the startup, one challenge that we have, some of our groups, they invest in startups that are going to other markets. And if the home country of that startup is big enough, it's hard to find startups with this appetite to go international while they're still in the pre-seed or seed phase. Like Brazilian startups, they have a huge domestic market. So when they start, sometimes they think, oh, I'm going to conquer the country, and then I think about the next step and going international. But what happens is that if you're building a global technology, what will happen is that when you go to the next country, there is already someone there doing something. So you really need to act quickly. In Portugal, it's different. In Portugal, the market is really, really small. So all the founders here, they never think about Portuguese market. They started thinking at day one, European market, and day two, US, Latin America, Asia, whatever, Africa, whatever. So it's a good thing when you are talking to this kind of founders because they are already thinking globally. Point of attention to these founders is about focus, because although it's a great thing to think internationally, you cannot do 5 things at a time, especially if you are a startup with a small team. I think that the most valuable asset of a startup is the time of the founders. So you really have to pick very wisely where you're going to spend your time and your energy from your team. So focus and, like this trade-offs, where to put first, what are the priorities, what I'm going to tackle first. It's very, very important.
You obviously lived through this or invested through the hangover after 2021, the 22, 23, 24, macro pressures, slowing exits, higher cost of capital, geopolitical risk. How did your investment criteria and risk frameworks kind of adapt during those years? And how do you kind of see it adapting now that I feel like things are kind of thawing out here as we enter 2026?
Yeah, well, I don't know, because I think that 26 has started so wild that I was thinking about it 26, but now I don't know anymore. And the thing is that you're right. We had this hangover. It was hard. Many of the startups, they were planning next rounds and they stopped for a while. So we were seeing the value of having good execution teams. So not only the visionary founder, but the execution founder, and how valuable was it to have a visionary, but also someone that is very disciplined, that knows how to manage money. So this was a very valuable asset to the startups. The ones that could have this at home, they could survive it much better than others. But we have to help and support startups that they didn't have these competences, that they were not with these skills in place, and like helping them to raise bridge rounds, or bringing co-investors, or doing some loans or extra money, or, to help them go through it. And many of them, they survived it really well. But it was a very, very hard time. In these times, of course, fundraising gets a lot worse because people were not, their level of confidence, it's really low. So the ones who are thinking about entering angel investing, they got a lot more cautious. Maybe it's not, there's coming a bubble and there will be an AI bubble. I don't want to be caught in the middle of that. So it's hard in terms of fundraising. But the thing is that I believe that good businesses, we always have opportunity for good businesses, especially good people, good talented people. So the fund managers, they also learned a lot in these times because they had to understand, they had to work closer with the founders and support them in what they needed. So I think that the angels had the opportunity to prove how useful they are to the founders. But I was thinking of, in 25, it got better than 24 in terms of fundraising. And also, I think that the startup founders, the startups that were pitching, they were already much more conscious. They were not in that, I think I value 20 million and I want to raise 5 million, and I have 10 clients. And you say, oh, really? So I think that it was good in a way to fine tune a little bit expectations. And I was expecting to say that, 26 will be much better, but now I really don't know. I think that we are in a situation with, so in one hand, people are afraid of what's coming, like in terms of the globalization, deglobalization, all the international relations. This is going to suffer a lot this year. But in the other hand, I believe in the power of building stuff and in the power of founders and entrepreneurship. So I think we need to fund the world that we want, investors and people who have the money and need to understand that they need to continue funding. I think it can be a better year than last year if we unite our efforts around the values that we believe.
Yeah. Well, let's talk about looking ahead. What's coming up next for Core Angels in the next year or two? In terms of geos, funds, any other innovations in the pipeline?
Yeah, we started doing this last year. We are building a layer of syndicate on top of the funds. Why that? Because we have more than 100 startups invested. So it makes sense that we can get the best ones, the ones that are fundraising to grow even more and make it available to anyone in the community. So if we started doing this as an experience last year, but we're going to do even more this year. So we are right now, we have a sports tech startup that was presented and approved for investment in the sports tech group. Now it's been available to all the community, so anyone can write a check and invest through a syndicate. So this is an implementation with the objective of bringing to our angels more opportunities, not only in their funds that they are investing, but also in the whole community. This is, and also to the founders. You can raise like 200 with your fund, but also you can raise more 100 or more 200 with the whole community of Core Angels. And when you do that, it's not only about the capital, but it's also counting on people that will be in other countries, at least rooting for you, but hopefully helping you build your business there. One of the things. And the other thing that we started doing, and I believe we'll do more this year, is the education side. So making sure that angels, they can be better in what they do, they can feel safer in terms of making decisions and evaluating startups so that they can feel empowered to do that and to bring more opportunities. These are two things that I see in the pipeline.
Yeah. What about you? I mean, you've recently stepped away as CEO of Core Angels. What's next for you?
Yes. Well, I took some time to rest a little bit. To be honest, I was needing this. I'm giving some thoughts on next steps. One of the things I want to do more is something that got me last year was speaking and doing conferences and university. I like it a lot. I really do like this. And I'm now putting together a website and all the stuff to do this more professionally. This is something I love doing. But I've been in conversations with about my next role. So I think in some more weeks or months, I can say what I'll do, but definitely in the ecosystem, definitely working with innovation and scaling investments and providing access to capital to good and talented founders.
What do you believe are the biggest tailwinds or headwinds for angel investing globally in the next 5 years?
Well, I think that investing together is a trend more and more, like building groups, or I see many people who have tried angel investing and had a very poor experience because they were doing this, not because they were doing this alone, but because they were doing this with not so much support or preparation, or they were doing it like gambling, like someone who is buying stocks and I don't understand nothing about this market, but let's gamble a little bit. And the chances that this is going to end well are very, very low. So I think that people are starting to think better or I will take some time to really understand this thing and do it by myself. But get courses or education or learn from a more experienced angel, whatever. Or I will join a group, which is a very quick way of learning and do this. So I believe that doing more and more groups. I've been meeting many other groups in Europe, but also in the US. Another thing also is that angels are becoming more experienced angels are becoming wiser in terms of terms and clauses, especially in the next rounds. So angels, they have a difficulty that is when they are negotiating their exits and the VC fund is going to buy their shares, the negotiation is really hard for angels. Usually VC funds, they say, well, I don't need to buy your part. I can invest in the company and leave you there. So I think that we are improving on this, like having more favorable clauses to angels when they enter an investment for the next rounds. And this is needed we need to address the issue of liquidity and exiting. It's important for the ecosystem that the angels who are investing, they have not a guarantee, but they can trust that they will have an exit and a fair exit when the opportunity comes. So This is very important. Like secondary market is also something that I've been hearing this here and there. Nobody has been implemented this in a very scalable or worldwide way, but I've been listening to many conversations from big players around this. We need to build some solution for secondary markets and start buying shares from angels because they will want to share. It's important to mention that there will come a time that after we invest and we have supported the founders, after they grow, they will have to find new friends, and there comes a time that we cannot support them anymore as we did in the beginning, that they will find much more support and help in bigger checks and bigger companies. So we need to address this. So I think that the secondary market is something that everybody's been talking about, but I didn't see yet any, very robust and scalable solution for this.
So if you were a first-time angel investor coming out now, making your first investments, what 2 or 3 things would you tell them to focus on and conversely maybe avoid?
Okay, I would say be cautious about showman or showwomen. It's really easy to get impressed with people that they can present very well and do your due diligence. It's important to know if the story that is being told is really the story behind. Because it happens. Of course, that it's not the majority of founders, but it happens. Sometimes you can fall for some bad tales. One thing is like join a group, even if it's not for investing together, even if it's just for going to network events, but join other people and learn from their stories. Ask what they are doing, what they failed, what they learned about it. You can learn immensely from other people's experience. And people in this kind of environment, they are very open to share. So take advantage of this. Talk to people and ask their advices. Should have done this more in the beginning. I think it would scale my learning curve much more. And the third thing would be don't wait to be prepared to start doing it. There is not a course for doing this. You can get content, you can read book, you can talk to people. But the truth is that it's a very dynamic space for investing. You have to, and it's something that you learn differently from the stock market. You invest in a company, you're never talking to the founder of the company, In the startup world, you can talk to the founder of that company. So it's something that it has a lot to do with relationships. So if you don't start, you'll be just thinking about how it would be. So start slowly, start with little checks, but start doing it, start practicing this, because then you will learn a lot from the dynamics, from people, from how these things are built. So I would not wait too long to start.
Yeah, I love that. What mistakes are early stage founders making that you wish they'd stop doing?
Well, there is one mistake that is you need to be unique, Like we have many startup founders approaching investors every day through email, through LinkedIn. And I receive tons of messagings in LinkedIn and email. They are, a lot of text. I can't spend half an hour trying to figure out what is the business of the person. So try to be very, straightforward and don't talk to anyone. It's important to do some research. If you're reaching out to someone, if you think it's too much to approach people individually, go to groups, go to funds, go to whatever, to syndicates, but study what they are doing. I receive many proposals of investment, like, oh, this is an amazing opportunity for you. And then I see that they didn't realize what I'm doing. I have like offerings to invest in businesses that are nothing what I do. So I think it can be much more effective if you study your investors, potential investors. And one thing they tend to think, and I understand why, because all the industry was built this way, like if they were the only one chosen, but they also have to choose their investors. And this is extremely important because many times they believe that, well, I am the one needing resources and they have money to throw away. And it's not like that. Investors, they also need good founders because they are not looking for anything to invest. They are looking for good things to invest. So you're also making the choices. You're also choosing your investor. This is extremely important. And it gives you and the investor a sense of value. You're not there begging for money. You're there presenting an opportunity. But try to study a little bit what are the investors doing.
Love that. And from your vantage point, how should VCs and angels collaborate more effectively or differently to support founders and ecosystems?
Yeah, I see that. I've been seeing a lot of new VCs, like micro VCs or VCs wanting to go more into the early stage, which I think is very, very good for the industry. In my experience with founders, for many years, they were going to VCs because they was the only source of funding they knew, or it was the most common or most mentioned in the media. So they would go to VCs and VCs would say, oh, okay, come back when you have the metrics. And they would say, okay, Cintia, what do I do until I have the metrics? I need money for my business, okay? So it's good that VCs are coming a little more in the early stage. And I also have been seeing lots of collaboration. In Core Angels, we see this a lot. We have many angel funds that are doing in the same rounds, they are investing, and other VCs are investing as well, which is good. Usually VCs are more formal in terms of governance. They will require a seat on the board. They will have their governance, compliance stuff, etc., which is also good for the startup because they will grow in the sense. And angels can be supportive also with a seat in the board or with more informal. It's a different mix, because angels, they are more available to be supporting, and the VCs, they are more into the financial side of the investment, but they can leverage a lot. Both they can leverage a lot each other. So I think it's a good collaboration. I've been seeing this in many of the funds in Core Angels.
Yeah. Well, let's wrap up with some rapid fire questions. What book has influenced your investing mindset the most?
Oh, I'm gonna mention a book that is not about entrepreneurship, but it's about a big company that is Shoe Dog, the story about Nike. And this influenced me a lot because I realized that even a company that is that big, that huge, they were, for a long time, they were, in the edge. They were already producing millions of shoes. They were already in many countries, but the risk was there still. They were operating in a level of risk that was shocking to me, and this changed me because right now when I evaluate startups, even they are more late stage, I pay more attention to this kind of thing because even Nike could be operating for years in that level of risk. So now I realize, okay, but they are telling me this story. Let's take a look at all the risk levels they are really facing right now. So this is one that contributed a lot to changing my mindset as an investor.
What's a startup in your portfolio or a Core Angels portfolio startup that you're most excited about and why?
I like one very much that is called Gova. They are building a substitute for sugar, and they are from Finland. They have been invested here in Portugal. They are now moving all the stages for approvals for the product, and not only substituting sugar, the sugar itself, but also producing lots of cakes, cookies, brownies, things with this fiber. It's a fiber. So it's very healthy, and I think it has a lot of potential for the future.
If you weren't angel investing, what would you be doing instead?
Maybe creating a startup, or, I would be for sure in something related to innovation. Probably I'll be doing a PhD on angel investing or entrepreneurship or this kind of thing, studying. University. I love it.
What is one piece of startup or investor advice you believe is underrated or under-discussed?
Yeah, I think that there is one skill that I believe founders sometimes they underrate, many times they underrate, that is sales. This is something that I really like to assess in teams, because we usually tend to think that it's easier than it is. And it's really hard to sell innovation. It's really, really, really hard. I was in this role when in my startup, I was the commercial part, and it's extremely hard. It's not like selling a product, established product. And usually everyone takes it for granted. Everyone thinks it's much easier than it is in reality. So sales is one of the points, I guess.
Yeah. Speaking of skills, what new skill are you personally working on this year?
Well, this year, my goal is to study more about AI, like in a practical way, like building agents, how to use this more. I've been using in my personal and my professional life, but very randomly. I really want to study it more and build some stuff for me to make life easier and work more productive as well. So this is in my pipeline for this year.
Yeah. From your experience, what's an underestimated founder trait that tends to separate those who scale versus those who plateau?
Great. And this is hard, this is really, really hard to assess. And I think this is why many of the successful founders are immigrants, for instance, because, immigrants.
That shows grit.
Yeah.
It self-selects for grit. Yeah.
Exactly.
That's my theory of the United States, by the way. We're all kind of here because we all chose to go to a place where there was opportunity and be effectively entrepreneurs. We're a nation of entrepreneurs.
Absolutely.
And
I totally agree with you.
So it kind of selects genetically for that kind of in our DNA a bit.
Yeah. And everyone that is there looking for this and has accomplished something, as has already done a lot, especially if you're coming from, and it doesn't need to be from another country, even if you're moving from one state to another or from one type of family to a type of business. So this kind of changes, it reveals that the person has a lot of grit and will not give up very easily.
Yeah.
It's common to see in some ecosystems, it's common to see the kind of founder that is playing around, I think this is a good thing to do. My father has some connections. My mother can provide me. They can build stuff. Of course they can. And I'm not going to be generalized on everything here. I think that it's much easier for them because it's a lot of rejection. When you talk about startup, sales, all this kind of things that we were discussing right now, it has to do a lot of rejection. And if you're not there to get so many no's in your face, and if you can give up very easily, it's not a very easy pathway. So grit it's extremely important. It's hard to assess. It's not easy to assess. But I believe
ask some questions about their background typically, what's the hardest thing you ever accomplished?
Their story. Then you can figure out,
tell me about your background. Tell me about your origin story.
Yeah. This person is not here just to...
A question I've actually used is why do you think you have a chip on your shoulder?
Yeah, that's a good one.
Yeah. Because usually people with chips on their shoulders have something to prove, and they're kind of
Yes, absolutely. And they will not give up very easily. They will have to prove that, So that's a very good one.
I love that. What's a commonly held belief in angel investing that you disagree with or think will be proved wrong?
Well, this is a little controversial because people, they like to say things like, invest in things that you know very well. Yes, it's true. It's good that you know that industry. But sometimes I feel that as not so good. I see many people that they know a lot about that industry and they want to teach the founders how to do that. And this is tricky, you are not there. If you are investing as an angel, it's the founder's call. They have to make choices. You can influence, you can suggest, you can bring data, you can make connections, but it's not your call. You're not going to control that person. You're not going to decide what you're going to do. So if you know a lot about that industry, sometimes I think it gets in the way. So I'm not a very fan of this sentence. I like to invest.
Yeah, sometimes you have to be a little ignorant to believe it almost, right?
Yeah, exactly.
You have to have a little bit of ignorance and go, I think this could work. If it works, it's a big thing. And some of my biggest, now that you say that, some of my biggest markups have been things that I wasn't an expert in. I knew a little bit about it, but enough to invest, but I wasn't, it wasn't like AI marketing tech, which is probably the thing I know most about. Right? Yeah. Anyway, that's a good insight. Given your global footprint, what region do you think is poised for breakout in startup and angel activity next, and why?
Well, I hope Europe does it, but I'm not sure. Well, I think in Europe we are waking up. I hope. We have been suffering a lot from regulations, lack of incentives, and in Europe we have some countries they have been doing a good work and incentives for investors, especially angels. Other countries, not that good work. And founders, what is happening is that when they get to Series A, B, C, they go to other countries. And if they continue doing this, what will be the future of innovation ecosystem here in Europe? So we need a change. And we've been seeing here and there some movements. I hope this happens. Latin America is a very good market for this also. But the issue there is that emerging markets, they have a very high interest rate. So capital prefer to invest in safer and high returns applications or kind of alternative investments. It's really tough to convince people with a lot of money to invest in startups when compared to Europe, for instance. Asia is booming and continue doing this. I think they are huge, they are fast, and we have a lot to learn with them about speed. And Africa will be the future because we have so many challenges there. They are building their own stuff in ways that we cannot imagine, with their own ways. And I think that entrepreneurship can mean a big change in people's lives when you don't need anymore, when you can build stuff without the need of government or very formal roles or big companies, or you can do stuff with your own. Once people realize this, I think this will accelerate a lot, especially in these emerging markets.
Last question. If listeners could take away one sentence from our conversation today, what would that sentence be?
Come on, guys, let's fund the world that we want to live in.
Love it. Well, Cintia, thank you so much for coming on. I learned a lot. Really enjoyed the conversation.
Thank you so much, Brian. Thank you for having me.